the question comes to you on China. After all that we've spoken, the net dollar return that foreign investors have earned on China is much, much less than India.
It's zero over the last 5 years for the option that is available.
Wonderful. So with that background in mind, do you also construct portfolios which are minus China?
No, there are not too many ways of building portfolio where you can actually add China. You don't have too many investment vehicles. All that you have is, Hong Kong index getting factored in. But that apart, I would be very wary. In fact, there was one index. There is an index called FANG Plus. It has 10 big technology stocks of the world in it. They are very large position, 10% each. It gets rebalanced every 6 months. And two Chinese companies were part of it about 2 years back. And that was a nightmare because that was the beginning of the fall of that Alibaba and Baidu, which were the biggest component of this.
They had to remove them.
That led to the drag of that index by 50%. And these two companies lost their value. So one is to actually look at Chinese companies as great businesses, great margin, great market share. But as an alternative or as an investment avenue, they are horrible. They are nightmare for investors. Because the basic belief that, businesses can work, or for the investor centricity, the way we are able to put people in jail for their corporate misgovernance in India, that I think, is far away in China.
Okay. Maneesh, given the fact that the rupee is on a constantly declining trend over the last 3-4 months or so, where do you expect it to settle? And obviously, two benefits from rupee depreciation, any sectors that you find interesting?
So the first order thinking on rupee, of course, is that purely from a way we all, and including RBI measures, is real. I think we have sort of close to a decent valuation now. Last time also we discussed, close to 87, 88 is what I thought it'll get to. We're already there. Now, of course, it is a dynamic situation. If tomorrow there were to be more sanctions on China or more tariffs in China, it's, as I said, the route to, if there were to be more tariffs, eventually it would mean sort of more depreciation for INR. INR will have to depreciate significantly more than CNY because China would be otherwise dumping their goods here. So to that extent, it's possible that versus what I would have thought 3 months ago when I talked to you that 87 is where I see it. It's a little bit more open-ended now. That's one. Okay. Number two, of course, rupee typically depreciated rupee typically helps things that we sell abroad and which are sort of built in dollar. Something that built in dollar is actually IT. So again, it benefits. It's a good. Gold, IT, all of these are sort of effectively built in dollar. So therefore, actually, they do benefit. Metals also are effectively built in dollar because, there is a import parity. And to that extent, it should benefit. But because it also has an angle of Chinese economy not doing well, therefore, it's avoidable, so to say. So to that extent, I would say, precious metals and IT services is one way to kind of bet on sort of weaker currency. So Indian sort of index is actually a beautifully constructed index, in all kinds of situations, financial distress, rupee depreciation.
You're talking about the Nifty.
Indian Nifty is a very nicely constructed place with a lot of, global sort of play built in through USD INR and some of it actually through exports. So to that extent, it's a safe place to be. Even in distress, it actually in 2013 or 18, the Nifty does all right. So sometimes, you see pain in small cap because they're in intermediate sector. So if, let's say, economy were to slow rapidly, then small caps and mid caps actually don't do well because they're a very high beta. And, their margins actually erode very quickly when the economy slows down. But the Nifty does all right. So to that extent, it's given that you asked this question from all of us, if you also kind of think that, there's a lot of uncertainty, at margin you may want to hide in Nifty, that's a sort of a safe place to be in.
Okay. Dhiren would term it as a large cap fund.
Yeah, something like that, yeah.
Okay.